So this is what we have on the screen. Professors, I want us to discuss to be able to know how much expense we have incurred for the year 2024. So let's do it this way. We have two buildings, right? Building A and building B. Now, as at the beginning of January, we're given information that we owe some rent on building A. However, for building B, we paid in advance. Now, during the year 2024, we have paid rent of 15,000 Ghana cedis. As the year ended, we have paid in advance, this time on building A, 200. And we have some arrears on building B, 300. How can we organize this information to know the exact rent we have paid for 2024? Please, any idea? Please, let's jaw, okay? Because understanding comes from jaw. Prof, if you want to give it a try. So you see, if you are employed as an accountant in a business which is not keeping proper records or applying the double entry principle, these are some of the information you'll be given, and you are asked to prepare the profit and loss account for that year. And you know you can only prepare a profit and loss account when you know the total expense for that particular period. Now here you have 500, you have 1,000, you have 15,000. Which value are you picking to your profit and loss account as expense for rent for that year? Prof. Ella. Prof. Jacinda.
Is that one?
Yes.
Please, I will pick the 15,000.
Huh? Okay, Prof. Jacinda says she doesn't like problems. She will pick 15,000 and that is it. Prof. Echa. Ella and if you will just tell the person, please, I don't want the job again. Take. Prof. Echa, what would be your response as well? Would you pick any figure or you have something else? Or you'd also follow suit as Ella and Jacinda, Ella and Ifia.
So please the question again.
Ella says the question. The question is that per the information given here, if you are preparing your profit and loss account for the year ended 2024, what are you taking to your profit and loss as rent expense?
We haven't discovered it yet. So.
We haven't. So help me discover it, please.
So we don't know. We are waiting for it.
You are waiting for. Okay, interesting. So let's make it very simple. Now, to be able to go around it to find the rent for the period, you have to apply your double entry principle by debiting and crediting the account, right? So first of all, the first thing you have to, well, what type of English am I speaking? First of all, the first thing, apologies. The first thing you have to do is to open your expense account, right? So let me open it here. I think there's going to delay. Let me copy an account here and bring it in. Why is this thing? Okay. Now, I would want you to also, as it were, appreciate the concept you discussed under the sole proprietorship adjustment for expenses prepaid and expenses outstanding or owing. Okay, so let me put it here. Oh, why is this thing messing up? Okay, let me insert it somewhere here. Oh, is it because it's very big? Okay, so professors, let me see if I can put it on the next page to avoid. Okay, so professors, you from the knowledge from the adjustment of sole proprietorship final account, I want to believe you all remember that your expenses owings are liabilities and expenses prepaid are assets. Do my professors appreciate that concept? Let me get a response from you now, professors. You appreciate that expenses, yeah, expenses prepaid are assets and expenses owings are liabilities. Okay. And vice versa is for income. Income prepaid is a liability, and then income in arrears or outstanding is an asset. Okay, so this is my expense account. I'm going to make the title rent account. Great. Now look at how we are going to use the information to get our rent for our profit and loss account. Okay. So like I indicated, the first thing you need is your opening balance, If you want to prepare your account, you need to appreciate the opening balance, okay? However, the opening balance could be a prepayment or an arrears or outstanding. So let's look at the information given here. We're told at the beginning of the year 2024, Ella, you have a question.
Yes, please. Is it like going to be one class of like just one type of expense, or they can give you like expenses in general to calculate for them?
Okay, so in your attempt to prepare your profit and loss account, you agree that you need to less your operating expenses, which could be salaries, rent, telephone, rate, maintenance, and repair. So it's possible that you find a business and you may have to prepare the expense account for rent, expense account for maintenance, okay, expense account for um, maybe what else, advertising, etc. Okay. Now it's possible, okay, sometimes it's possible to put all the expenses in one account. As a matter of fact, when you go into practice, it's possible that you can have a control account for expense. So be it advertising, um, rent, maintenance, repairs, it could be analyzed in a single account so that the total is taken to the profit and loss as total expenses. However, they attach a note to it, and that note will give you the individual breakdown of that total expense. But for your level, you are supposed to deal with your separate expenses. So if it's advertising, you open advertising expense account. If it is rent, expense account, in that order. You're not supposed to do all together as one expenditure. I think you have a feel of that when we do branch accounting. Okay. But for now, let's appreciate how you prepare your expense account. Okay. Professor, I know you are not okay, but
Yes.
okay. I know you are semi-okay. So this is our rent account. Let's look at something here. So the first thing is your opening balance. You need to record your opening balance. Dear professors, we're told at the beginning or at the opening that we had rent outstanding. Outstanding means arrears or owings. And if we appreciate that any expense outstanding is a liability, then what this information is telling us is that we have a liability on rent at the beginning of the year. Liabilities have credit balance. So we'll come to the credit side and show that on 1st January 2024, we had a balance brought down on rent of, we had a balance brought down of 500 as an outstanding, a liability on rent. The next information was that at the beginning, there was a prepayment. Okay. Prepayments are assets. So we'll come to the debit side since assets have debit balances and indicate that on 1st of January 2024, we had a balance brought down of 1,000. So that's how you record your opening balances. The outstanding or owings or arrears are liabilities. So you put them at the credit side with your balance brought down because an opening balance. If it is an asset, you put it at the debit side with your balance brought down. So you record your opening balances. After that, you record how much you paid for the year. So if you have paid anything on that expense for that particular year, you need to record it. And beautiful ladies, you know from your double entry principle, if you pay expense, okay, if you pay expense, what do? You debit the expense account and you credit your cash book. So if you pay rent, you debit rent account and you credit your cash book, right? Good. So I brought you to this page for us to appreciate. You record your opening balances, prepayment, arrears if there are. Then you look for the cash or check paid during the year for that expense. Then finally your closing balance. So let's go and see. We're told that we paid rent of 15,000. So during the year, total rent paid is 15,000. So we paid some amount during the year. We don't know the date within the year on which this amount was paid. So we can use the 31st December 2024 as cash paid for rent, 15,000. Then what is left is the closing balances, the carry downs. Carry downs. I tell my student, if you have been able to record your brought downs, then your carry down shouldn't be a problem. It is an expense account. What are your carry downs? Your carry downs are prepayment. So an expense prepaid, which is an asset. So any assets carry down will be at which side? Professors, let me ask you this. The closing balance representing an asset, would we put it at the debit side or credit side?
Debit.
Okay, Professor says debit. Any other version or different view?
Debit.
Hey, wait. Credit. Credit, sorry, credit.
Okay, so if it's, please get this and get it straight. All assets have debit balances. So they are opening balances or balance brought down. Note that the opening balance is the balance brought down. It's always at the debit side. But their balance carried down, closing balances, go the opposite side, which is credit side. Okay, so this rent prepaid is an asset, right? But it is at the end of the year, hence it's a carry down. So it's going to come at the credit side here. 31st December 2024, balance carry down. Okay, 200. Then the last thing is the outstanding, the arrears. That one is a liability, okay? But the carry down will be at the debit side. So don't get confused. So 31st December 2024, balance carry down. That is 300. Now, if you observe, you see that I've left a space here. I've left a space here. It's a deliberate space because that space, after balancing our account, will tell us how much rent expense we are to charge to our profit and loss account. So as at 31st December 2024, whatever we get there represents what we are taking to profit and loss account. Let's do the balancing. I think this side will be more 1,015, 16,600 and 300, sorry. Okay, 16,300. So when we less the 700 from it, then we'll get 15,000. Professors, assist me with a calculation. I think 15,000. Is it 700? 600?
500.
It should be 600, right? Please confirm.
No, Mr. Moore. Mr. Moore,
Yes, please.
please, isn't it 15,500?
Okay, so the total here was 16,300. We are lessing 500 and 200. So we are lessing 700 from it.
Mm-hmm. Oh, please,
Yes.
the way you're putting it as confusing. That's right. Like, I
Okay.
thought maybe you're supposed to be under it.
Okay, so the reason why it's above the carry down, when you are preparing an account, your closing balance should be the last item, right? So we can't put the carry down at the top of our profit and loss account. That's why we leave the space and bring the carry down. Okay, but in balancing, okay, let me erase it so that you don't get confused. If you are balancing an account, you get your totals. So the totals will be 16,300 and this side will be 700. So the difference is what we put here to balance it, and that's 15,600. Okay? So when you are done, you bring your carry downs. Okay, so this carry down here at the credit side 200 will come down 1st January 2025. Balance brought down 200, and then 1st January 2025 balance brought down 300. Okay, and this is your rent account, and you have been able to determine the total rent for your profit and loss as rent expense. How did you do it? You did it by recording opening balances, okay, putting the assets or prepayment at the debit side, the liabilities or owings at the credit side, recording how much you paid during the year, as well as your closing balance. So that is how you prepare an expense account. Look at the opening balance. How much did you pay during the year? Look at the closing balance. But you should note that there could be prepayment or outstandings. And as you know, outstanding is the same as arrears or owings, and they are liabilities. Okay, and the prepayments are assets. So you use the assets liability to debit and credit them respectively. Okay? Professors, any question? Question time. If you have no questions, I beg to continue. Okay, so no question for me. Are you sure? Yeah, Prof. Jacinda, go ahead.
Sama, please, does it mean that so the actual money spent on rent is 16,300?
So the actual rent incurred for the year or supposed to be incurred for the year 2024 is 15,600. Because what you incur for the period is what you take to your profit and loss account.
Okay.
Great. Because you remember the matching principle, matching, which, Ella, I'll come to you. The matching principle says that when you are finding the profit for a period, you match or you compare the revenue of that period against the expenses of that period. So if you are looking at 2024, you have to look at revenue for only 2024 and expenses for only 2024. It is based on this principle. That's why if there is a prepayment that does not fall for that particular period, you remember trading profit and loss account, the profit and loss account, you less prepayment because those payments are not for the year, they are for the next year. So we less it. Okay, and then we add arrears. Even though we haven't paid, the arrears form part of the expense, so we add them. Okay, so that's the rationale. Okay, Professor, let me pick your question.
So I was wondering, you see, this one is like it's two assets, like yeah, rent, but like it's two buildings.
Yeah.
What if they give you just one thing? Let's say, I don't know, just they only have one building. I mean that one there won't be two balance boards downs and balance boards, balance carry down, right?
Okay,
But
so
just one.
yeah, in answering your question, the first prompt I'll do is Abi said. That Abi, if you write it in YC English, the examiner,
Sorry.
the examiner will mafia you. So I think I've had the experience of seeing, some of our boys here writing some slangs in there. Okay, so on the Abi note, Profella, it sounds
Sure.
weird. It sounds weird if the same building, right? We have arrears and outstanding. That is why I brought in the two buildings to make it sound real
Oh,
that, yeah. If it's one building, then the possibility is that it's either we are owing or we have paid in advance. Okay.
yes.
Uh-huh. But it could be one building and maybe it is divided in sectional stores. Okay, so maybe we have paid the rent for store A, we haven't paid the rent for store B. But if it's a particular building and the contract is with one specific maybe landlord or landlady, then it wouldn't make sense for the same building to have arrears and prepay on it at the same time. That would be weird. So I think I understand the point you were coming from. Now, let me emphasize again that it's not always the case that you get prepayment and arrears at the same time. There are some questions there are not even opening balances at all. Okay. So if they are not there, you don't put them there. But this is just to give you the specific guidance that if you are preparing your expense account, ask questions about the opening balance. Do you have an open? So if you enter a business and you want to prepare their expense account, you ask them, were you having any arrears from last year? Did you pay anything in advance for the next for this year, as in at the beginning, right? They will tell you, okay, yes, we're owing some 5,000 cedis on this rent, this building as rent. Okay. Then you ask, how much have you paid during the year? Okay. And then at the end of the year, are you still owing on that building or you have made some prepayment? So these are the questions you ask to prepare the opening balances, how much has been paid during the year, and your closing balances. Okay, so let me go back to the format. I wanted to do this with you before showing you the format. So if you look at the format specifically, it says that you first put your opening balance. If it's a prepaid asset, you put it at the debit side. If it's an arrears or outstanding, you put it at the credit side like we did for the scenario, okay? Then you put in how much was paid during the year and put in the closing balances, right? Now I tell students, if you can remember the opening balances, the closing balances shouldn't be a problem, okay? Because opening arrears is a liability, so brought down is at the credit side, the carry down should be at the debit side. Okay, so this is your expense account. In fact, I haven't shared the notes because I'm having challenges with my phone. So I'll do that. It's with a repairer, and I'm supposed to go for it today. So I'll share it accordingly. Let's take another example, this time in a question, and see how we can prepare the expense account. Okay, let me go a bit faster. So, if there are more questions, please throw them at me. I'm ready to catch them. Okay, let's take this illustration 3. Okay, so in essence, it becomes important for you to prepare the expense account if one, the information available is plenty. Okay, like the scenario we saw, there was prepayment, there was arrears, they have paid some during the year. So you need to assemble them in one account to get your true expense. Okay. Now, if you check this question I've put on the page now, let's assess. You see some expenses on the credit side here: salaries, postages, general expense, drawings, rent. Well, drawings is not an expense to the business, but to the owner. So we deduct from the capital, right? Now, if you come here, you see information on stock, debtors, creditors, and then rent prepaid. A balance at the opening and a balance at the closing. Dear professors, I think it will be easier if I ask you how much salaries are you taking to your profit and loss account. That you can say is 10,800. Postage is 2,400. General expense 12,340. But if I speak of rent, you'll be confused because you have some amount here paid in the cash book. You have some amount here for prepayment at the beginning and at the end of the period. So you see that it becomes a bit problematic. Are you taking the 5,700 or the 440 or 670? Or you have to add all of them. So that gives you the clue that you need to prepare an expense account for rent, especially because there are issues with it you have to deal with. Okay, so let's look at how you prepare it. Now, most of the times we don't add the dates, and we just put in the balance brought down and stuff. But if you want to add the dates, no problem. So, dear professors, we are supposed to prepare rent because we are confused about how much we are charging to our profit and loss account. So, my first question is, what do you need? And my first answer is, you need the opening balance on rent. Do we have an opening balance on rent? The answer is yes. What is it? It is a rent prepaid of 440 at the beginning, 1st April 2004. Where do we put this? Rent prepaid is an asset, so any opening balance will be a brought down balance, brought down at the debit side, 440. Was there any arrears? No, there was no arrears. The question, right? So we move on to how much was paid during the year. We have been given a cash book, and in the cash book we see rent at the credit side, which is the payment side. So that tells you that they paid rent of 5,700 during the year. If you pay rent, you debit rent with your cash book, 5,700. What is left is the closing balance. Do we have closing balance? Yes. How much? 670. What is it? A prepayment. So prepayment closing balance is an asset, but it's supposed to be carried down at the credit side. 670. Okay. So yes, you balance your rent account and see how much you take to profit and loss. And it's always going to be at the credit side. Okay. It's always going to be because an expense. So profit and loss. Let's balance it and see. This will be 6,140. Of Jacinda, confirm the figure for
Mr. Amo, please, what did you say I should do?
Is the figure accurate? 5,700 plus 440. Yes, I think it should be 6. Yes. Then we less the 670 from it to see how much we are going to get.
5 plus 70. 5,470.
Great. 5,470. So that will represent the total rent to be taken to your profit and loss account as an expense. So you see, if you didn't prepare the rent account and you picked any of the figures, you would have been wrong, right? So that's the essence of preparing the expense account under single entry records. And always remember to bring your closing balances as brought down. And that is your simple rent account. Okay. Any questions, professors? Okay, let me see if you can use some 3 minutes to prepare some expense account for a particular question. Please, do you understand what we have just done? Can you comfortably prepare your expense account if you are asked to? So if I want to give you any summaries, what I mean is that if you are preparing an expense account, you look for opening balances, how much was paid during the year, and closing balances. But ask yourself, is it a prepayment or an arrears? So see this question. Okay, we have expenses, wages and salary, general expense, rent, postage. Okay, when you come down here, you have wages and salaries owings, a balance at the opening and a balance at the closing. So you would agree with me that we have a problem of which figure are we taking, because we have 14,850 or 14,850, we have 560 and 740. So we have to prepare the wages and salaries account. I think there's another expense, rent, which was paid in advance. Okay. So my dear professors, I don't know if you want to give this a try and prepare the wages and salaries account. I'll be glad if you can quickly do that within 5 minutes and give me your answers. Or you want us to do it together? Oh, respond to me, these ladies. Why are you quiet this morning? Respond.
Let's try it soon.
Let's do what?
Let's try it soon.
Okay, we should try it together. Okay,
No,
I
not
get.
like acting with you. Like, let's all do it on our own.
Okay, so Jacinda says we should do it on our own. No, Ella, Ifia, Senam, do you agree? And Bene. And Prophet Chan. You want to try it? Yes, please try it. We have 4 minutes. 4 minutes to do that. Then we'll look at it in the next session, the last session for that matter. Okay.